welcome to our weekly look ahead at the markets here. And just a quick recap, obviously on last week, the narrative is very much on the slowing down in inflation, particularly that US CPI number, which came in as expected, down from 7.1% year over year to 6.5%. Core up 5.7%, up 3.3% month over month, but that's being led by shelter costs, and the Fed will be hopeful that its rate hikes will have an effect on shelter, as that component is particularly sensitive to interest rates, of course. So that move that data print was the key release last week. We saw steady gains, strong gains really for European equities last week, up around 8% or so. The FTSE up 5% or more, just testing that all-time high again, reflecting, I think, China reopening story, peak inflation narrative that seems to be seeping into the market, as well as a degree of cheapness for the UK market, still trading only around 10 times forward earnings against 15 times earnings for global equities. So investors still finding some value in the UK market. It was the top performer of the major indices last year, and it continues to make solid gains, as we said. Also last week, with the dollar rolling over, we saw a fresh multi-month low on the dollar index, 101 handle. Also the yen made strong gains towards the end of the week, as the 0.5% target on the 10-year Japanese government bond yield was breached, and the Bank of Japan had to intervene a couple of times on Friday with an unscheduled bond buying operation. That's traders really betting on a regime shift. They're saying that despite what the Bank of Japan is saying, they're going to get that yield curve control. That policy will need to go. Inflation is ticking up in Japan, and really it's the main laggard on the global central bank front. So it needs to catch up. And we think that when Haruhiko Kuroda leaves in April, that will be the time for a regime shift, not just with the main man, but also in terms of policy. And I think we are seeing them teeing that up ever so gently, and the market's trying to get ahead of that right now. So that we saw big gains for the yen. But the euro is also higher. Again, quite hawkish sort of noises from the central bank in Europe versus expectations that the Fed is moving towards slowing down the pace of rate hikes. The market's betting on cuts taking place towards the end of the year, and so markets is turning a little bit more bearish on the dollar and a bit more bullish on some of those other major currency peers. We also saw copper making strong gains last week. China reopening narrative. Crude was a bit more tepid, but this week coming up, it's really probably going to be more about earnings season. We've seen the big banks release earnings on Friday. We've got a couple more, Morgan Stanley and Goldman Sachs on Monday. And then throughout the next few weeks, we'll be watching the US earnings season with interest. And Netflix is one of those reporting in the coming week that we'll be focused on. It's expected to drive stronger free cash flow this year, according to JP Morgan, but we'll wait to see what the subscriber growth numbers look like. And also this might have a read across on some of those other streaming giants such as Disney. Last week we saw Nelson Peltz making a push to join the board of Disney, the activist investor who's had many proxy fights over the years. He's looking to drive change at Disney, and we wait to see what the read across from Netflix might be on that Dow component. Elsewhere, Davos kicks off in Switzerland. We've got all the great and the good of the world's financial industry and politicians and so on all gathering in Davos. So that's going to be something to keep an eye on. There's never too much in terms of the market from that, but we will watch it with interest nonetheless. Bank of Japan also in action. So going back to the end story, Bank of Japan might just tweak policy again this week. We're not sure. That was what the market was trying to say to us last week, and we'll wait to see what happens there. But it looks like unwinding of those long dollar positions against the yen is continuing at pace, and so the Bank of Japan is another risk event to watch out for in the coming days. That's it for the moment, but it's really a story of inflation. The inflation narrative has inflation peaked, and do earnings hold up in the face of a stagnant economy? So that's it for now. Thanks for watching.